Hey, Tim Kerley here with your Friday FAQ. There's a lot of headlines out there these days about the Fed raising rates, and this is portrayed in the media many times as meaning that mortgage rates are also going up. So if you hear that the Fed might raise rates by 0.25%, then mortgage rates will follow that. Well, that's not really the case, and really indicates that the people that are writing the headlines don't always understand how this works. So let me break it down for you. When the Fed talks about raising interest rates, what they're talking about is the Fed funds rate. This is a short-term rate that banks use when they lend money to each other and is not directly tied to any kind of long-term rates. Now, whatever the Fed does is going to impact the broader financial markets, and in that way, mortgage rates might be affected, but it doesn't necessarily mean they'll go up. So just know when you see those headlines, it doesn't necessarily mean rates are going up. Now, the other part of this is there are some things that the Fed does do that directly impact mortgage rates, particularly purchasing mortgage-backed securities. Now, they've been doing this for some time. It's kind of a economic stimulus to try to keep mortgage rates low. They made an announcement some months ago and have already started pulling back on their purchases. They call this tapering. So they're still buying the mortgage-backed securities. They're just buying them at a slower pace with their ultimate goal to get to zero. So what this does is it really pushes rates down and keeps them artificially low when the Fed is in there buying these mortgage-backed securities. Now, the other thing to keep in mind is they can reverse course on their strategy anytime they want to. I mean, depending on what's happening in the economy, with the pandemic, if they feel a need and they feel like they need to keep those rates at a certain level, they could jump back in there and affect or start buying a larger volume of these mortgage-backed securities and thereby affect mortgage rates. Now, what we have seen, you may have noticed if you followed rates over the last couple of weeks, is we've had a little bit of an uptick on rates, and that is because of inflation fears. Inflation is the enemy of mortgage rates. So remember that. If you hear that inflation is going up, probably means rates are following that as well. So I hope this helps you. If you have specific questions or would like some more detail, or maybe I didn't clarify it enough, please feel free to reach out personally. Take care, and we'll talk to you soon. See ya.